Hi folks, this is Lee Gettess with the Market Sense for the week of September 18th, 2012. The charts we use come from the Trade Navigator software, one of my favorite tools. And we're going to look at the weekly bond market first. And you can see bonds broke down hard last week. I guess I should say in general, the financial markets had big weeks last week when they got hit with the new QE from the Fed. So wouldn't be surprising if they both had kind of quiet weeks this week. But in the bonds, they seem to be trying to turn back up here. And until they get back above this is the 147.08 area. Unless they break back above that, nothing really significant is being done here, and the support down below the market is around 143. But they seem to be trying to go up, and if they get all excited, my goodness, we could see them up here at the 149 area or even up above 151 here. But the real critical area is 147.08. If they're able to get back above that, then I'll believe they can go back into this sideways pattern. And there is reason to believe they might, because we do have some divergence in the RSI down here at the bottom of the screen. You can see this low is not as low as the previous low, whereas price did go lower. That could mean the momentum is lessening here and they might turn back up. But at this point, they've broken down to the highs and actually into the highs of the congestion area that lasted back into 2011, and they could still turn back up from here and still be bullish. But I'm getting a little ahead of myself now. The reaction to quantitative easing from the Fed has been negative initially each time, then followed by a rally. And, could be we might get the same thing here. We'll just have to watch and see. Now, stocks have also been extremely quiet so far this week. After the big up week last week, you'd expect them to be challenging the 1478 area. They have not done so yet, although I'd like to point out, since I showed it to you in the bonds, we do not have any divergence in the RSI. It does still look relatively strong here. The best support then, if it's going to continue up, is right here at the upper moving average. That's roughly the 1435 area. If they break down, that's what should hold to drive them back up. Now, they could break down to 1420 here at the green line, or even back down below 1400 here, and they would still actually look pretty good at that point. I think the more likely scenario is that they kind of accelerate up and blow off into a high at some point. I don't know how long that might take, but that's kind of what it looks like. A little increase in volatility after being so quiet. They might just kind of go parabolic and blow off up there. But I don't know where and I don't know how long, and, if they turn down from here, then clearly I'm wrong. But that's what I'm looking for. I'm looking for signs of a top, and at this point, with no divergence and just sort of an orderly increase in volatility, I don't see any signs of one yet. So that's what we've got for you today. I hope you can find something profitable to get yourself into on this rather quiet week. Thanks for checking in to see what we think.